Hi, in this video we're going to take a look at options CFDs. Options are financial instruments based on the price of an underlying asset such as indices, commodities, stocks and Forex. They provide the possibility to either buy or sell an underlying asset at a predetermined price on a specific date. Option CFDs, like any other CFD, are based on the price of the underlying asset, in this case the premium of the underlying option. Option CFDs provide you with more ways to trade your favorite instruments. Amongst others, traders would experience higher volatility than when trading CFDs on the underlying asset. The name of an option CFD has several components: the underlying asset, the option type, the strike price, and the expiration month. Let's look at some basic explanations of the components. The underlying asset is the instrument from which the options are derived. There are two types of option CFDs offered on the Plus 500 platform: calls and puts. In general, when the underlying price rises, a call option will gain in value, and when the underlying price declines, a put option will gain in value. Every option CFD has a defined lifespan with an expiration date. This is indicated in the option CFD's details. If you hold your position until expiry, your position will be closed automatically at the last available rate. In the market, the strike price is the price at which an option can be exercised. Trading activity often increases as the price of the underlying gets closer to the strike price. Meet Bob. He is a fan of trading shares CFDs. And this is Marley. He is enthusiastic about option CFDs. Bob is buying 10 shares of Apple at $100 each for a total worth $1,000. If the stock's price climbs to $105 and he closes the position, he will make a profit of $50. Marley decides to buy Apple 110 call option CFD. He buys 3,000 options for $0.33 each, also worth $1,000 in total. Then, assuming that Apple's share price reaches $105, the option's price might climb to $0.7. If he closes the position, he will make a profit of $1,100. So, with the same amount invested, options can yield more profits but could equally incur greater losses. In summary, option CFDs allow you to trade a wide variety of instruments with higher volatility through a range of put and call options and strike prices. Want to learn more about online trading? Check our website.